Good afternoon, everyone. This is Wayne, and this is the video version of the trade report, but it is a strategy edition. And I'm coming to you on Thursday, May 17th. So we're going to be utilizing a little bit of a different format today, which I hope meets with your favor. Well, this chart that I have pulled up here, and of course, I must state the obvious. My head, my presence is not present today, and that's by design, just because I want to be able to have you focus wholly and solely on the strategy that I'm providing for you. You still have my voice, and my presence will return in the next video. Tomorrow. So anyway, this is a chart of the Russell 2000 cash, and otherwise known as the RUT, R-U-T, and you can see the ticker symbol right up here, R-U-T, and this is a daily chart, and we are just going to take a look at what this thing has done, which has been basically on fire. Yesterday it made a new all-time high, a new all-time closing high, and made a new intraday high as well. We mentioned that in yesterday's video. Today, same story, new intraday high, new all-time high, and the question is, how much higher can this thing go? Well, there really aren't any rules necessarily in the stock market. There is a saying that goes, stocks can remain overbought for a very long period of time, and they can also remain oversold for a very long period of time, longer than what technical indicators would necessarily provide us with the information that they give us to let us know where support and resistance levels are. So, as you know, I primarily rely upon Fibonacci lines and Fibonacci levels and Fibonacci timing. And you can see where the Russell has a little ways to go until it reaches a secondary target off of this move here. So if I take a Fibonacci retracement from there to there, I get this move up to here. And price has already basically torn through all of the other price levels associated with this retracement. And the only one that's left is the 1618, which is the secondary target. And that means that the Russell is pretty extended from this retracement area. Now, we can also do retracements from here to here, which I did. And we can also do retracements from the January high to the February low, which I did as well. And we get a 1272 up at 1664, and we get a 1272 up at 1643. Now, those levels are important, and they're referential, meaning they still are able to be viewed from the standpoint of what is possible. However, we need to look at the most recent retracement and extensions for the purpose of getting what is the most likely, the highest probability price action in an underlying, in this case, the Russell. So what we have, of course, is this 1618 up here at 1631.79, and we closed today at 1625.07. Which means we have approximately 6 3/4 more points before we reach this level. But then the question is, then what? Well, there's a couple of different things going on. One, and it's probably the most important of all, is the fact that tomorrow is monthly options expiration. And there are a lot of unusual dynamics that occur on monthly options expiration Friday. You have institutional investors and fund managers and algorithms and virtually everything and anything that can be happening in the market happening as it relates to the expiration of options and futures in the market. So price action can and does become unwieldy. Now, every once in a while you end up with a day that is not necessarily as extreme from a price action perspective as you would have expected, but that's more the exception than the rule. So tomorrow, I am looking at the very real possibility that even though this thing is on a run and it's not looking like it wants to slow down, that it's gone maybe a little too far, too fast, and the market needs to kind of bring a little bit of reality back into play here. So for a very small investment, for a relatively low-priced trade, there's a very decent reward for even a small pullback in the Russell Cash Index. So what does that look like? Okay, well, let's go ahead and pull up a chart that gives us that information. And I shouldn't say chart, it's actually a component of the Thinkorswim trading platform. And this is actually a chart of the Thinkorswim trading platform of the Russell, and this is another Fibonacci level that I've been using as well. And let me just go ahead and pull this up. All right. So I know this looks a little cryptic, and for those of you who don't use Thinkorswim or aren't active traders or in charge of your own investments, bear with me here a little bit, and I'll show you what I'm doing and what I'm attempting to accomplish as far as a profitable trade is concerned. So if we look back at this chart, we see that, again, the closing price on the Russell was 16.25, with the very real possibility that it will rise to 16.31. Now, my thesis, however, is that it will retrace back down again to 16.15 or lower. Now, 16.15, of course, is where it moved up past in today's session, and I think it comes back down and possibly even a little bit further. So that's what I'm thinking will happen tomorrow. That's where, based on the fact that I think the Russell may have come too far too fast, and tomorrow is a monthly options expiration, and we could get that pullback, that nice little move. Now, if it doesn't happen tomorrow, that's okay. I've given myself a little bit of time. Excuse me. So the first thing that I want to show you is what's called an option chain. Now, I know for those of you who know what an option chain is, I'm stating the obvious and being kind of redundant as it relates to your knowledge, but for those of you who don't know what an option chain is, basically it is where the options for trading options reside. So what we have here is the option chain for the options that expire next week. So what I've done is I've given myself 8 days until expiration for the trade that I'm about to show you to work. So that's what this is right here. That's telling me I've got 8 days until expiration. And these are called the weekly options, and they expire next Friday, which is May 25th. So what I want to do is create it's a relatively low probability trade, which I know sounds a little funny, but if you set it up properly, and if your thesis is correct, and I do believe that my thesis will be correct at some point in the next 8 days, not necessarily tomorrow, but potentially next week. But I'm looking at tomorrow as being the very first opportunity for this to play out. So what I want to have happen, as I said, is for the Russell to retrace, to come back lower. And what I've done is I've bought what's called a bearish butterfly. And what that involves is selling 3 strikes in the put option side of the option chain expiring next Friday. And a butterfly is constructed by selling 4 center strikes, which are at the 15.75 strike price, buying 2 wings, consisting of 2 options each. So we've got 4 short put options for what is called the body of the butterfly. And then we have purchased 2 options, 2 put options for each wing of the butterfly. So, oops, let me get that. So this is the body. I've sold 4 put options, and these are the wings. I've bought 2 put options for either side of the butterfly. The center strike is 1575, the upper strike is 1600, and the lower strike is 1550. So you'll notice that even the upper strike is still 25 points below the current price of the Russell. So what I'm looking for is the Russell to come down in price. So what does that look like on a risk profile? And that was what I had up before I came to the option chain. So this is what it looks like on a risk profile. Now, just to be clear, this dotted line right here is where the current price of the Russell exists. This cyan colored line is the butterfly structure. This is what is created as a result of those put options that I just described, and that's the resulting structure from entering a butterfly trade. Lastly, this kind of magenta line here, that kind of, I have to use a little bit of a different, there we go. That kind of comes up at an angle and moves and kind of comes through the structure of the butterfly and then comes back down again. That's the expiration line. I like to refer to it as the profit line. And so what we're looking for is for the dotted line, which is the current price, to move lower. So in other words, we want it to go to the left according to this structure. You can see where the price is right now is at 1625. I'm looking for a move down to about 1610 to 1600. That would be awesome. Now, what happens if and when the price of the RUT moves down to that level? Well, you can see how the profit line moves higher as the price moves lower. So what we can do is, and if you look down at this corner right here, while I am moving my cursor from this area, from the current price, you can see, let me get that out of the way. You can see how it says on 5/17/18, which is today, this trade is currently worth $20. Now, if the RUT moves down $15 or 15 points, as the case may be, to 1610 from 1625, where it sits today, that trade becomes worth $295. Now, 15 points is a lot of points for the RUT to move. And it's not only a lot of points for the RUT to move, it's a lot of points for the RUT to move lower, because it's been on such a run to the upside. But we started getting some clues and some signs today that the RUT is looking like it might have terminated to the upside. It kind of went high. I'll show you what I'm talking about on the 15-minute chart. But that gives you an understanding of what I'm looking for as it relates to the movement of the RUT and how profit is achieved based on that trade. Now, I should also reveal to you that the cost of this trade was very minimal. I paid $148 per butterfly, so I paid $296 plus commissions, which were about, about $15. So we've got $296 plus 15, be $311 invested. Now, when I exit it, I'll also pay commissions, but the idea is to exit it at a profit, and commissions are handled and profit is achieved. Now, what I would love to see is a move back down to 1600. Now, what would that mean? That would mean a profit of just under $500. So, in a perfect world, it would keep going, maybe down to 1575. That'd be $1,000. I'm not really expecting that to happen. I'm really looking at this trade as being relatively short term and making me somewhere in the $200 to $300 range. If I get more than that, I'll consider it a gift. But remember, I only have 8 days for this thing to work. So I need it to move relatively quick. And part of those 8 days is this coming weekend when the market isn't open. So I really have only 6 trading days. So because it expires next Friday. But if it expires inside of this, what's known as the tent, then look what happens. And this is always fun to look at, but this is where the low probability dynamic comes in. So today's the 17th. You can see according to the date right here. But if we take that and we fast forward it 7 days to next Friday, that's Saturday. Let's bring it back down a day here. There we go. You can see how that profit line takes an entirely different shape, and it becomes real high in the center of this butterfly tent. So if price is in this profit tent on Friday, then this trade could realistically, potentially, be worth somewhere between $2,000 and $3,000. Now, that is a lottery ticket, folks. The probabilities of that happening are very slim. It does happen, but again, it's very slim. But this is why these trades are important to manage when they're profitable, because price can totally take the profit out of the picture in a heartbeat. So, again, this is a fun thing to look at. But if the RUT starts looking like it's going to stay in this profit tent as we get into next week, I might let it play out a little bit, but I'm not going to get greedy. That's the whole point of trading, is to say thank you to the market and move on to your next trade after you've taken your profits. So, all right, so I'm bringing the date back down to today's date. Let's do this. Let me get back. There we go. All right, so that's the construction of the trade, and that's what it looks like on a risk graph. And I've explained how I selected those strikes. And the reason I selected those strikes is because of what I just showed you. It's a very desirable risk profile as it relates to the profit picture and the subsequent cost of the trade itself. It's a very low investment for this trade. So the last thing I want to show you is the 15-minute chart of the Russell 2000. And this was kind of the clincher, if you will, of why I decided to do this. And actually, let's just take the 15-minute chart from here, and I'll just reduce this down to a 15-minute chart. And okay, so in today's movement, price action, if you will, it exploded out of the gate to the upside. You can see, the market opened and it just, boom, I want another new high. And it got it. Then it started kind of tipping over a little bit and then took a fairly decent plunge. Now, the reason it dropped, and every other index dropped as well, is because of some trade talk from Trump out of the White House during this period of time. And then after cooler heads prevailed and more information was known, and usual and customary shoot first, ask questions later reaction by the market, it started to go back up again. But when it went back up, it couldn't get any higher than the high tick of the day, even with this momentum. And then it started selling off again. So this tells me that there's a lot of resistance at that level. Even though the Fibonacci's are telling me that it can go higher, there is some pretty decent resistance right at that level. So with that, I am looking for prices to move a little bit lower, possibly tomorrow, again in the RUT. I just think there's going to be a little bit of a pullback, which would be in keeping with what would be healthy for the RUT. I'm not looking for it to just completely, collapse. In fact, I don't think it's going to do that. But I think it's come too far, too fast. It's found some resistance. A retracement would be healthy for it. And tomorrow's monthly options expiration, so there's going to be some pretty decent price action tomorrow. So if we can even get something that resembles this move, which came in at about 1619 and a half, that would still set up about a $200 profit in the trade. And this would not be unreasonable to have something like this happen tomorrow. I would like to see a little bit lower price, but what I want and what I get are oftentimes very different as it relates to what I'm looking for. So, when there are parameters and there's flexibility in the trade setup, then you can be patient, and you should be patient, and you should always have trade setups that provide the metric of patience in accordance with the trade thesis. So looks like our markets just reopened again from the quiet time, and we are getting a little bit of selling now in the Russell, which that's good. But we'll see how it all plays out. Now this is the Russell futures, so I can't trade the RUT at this point because the regular US stock market's closed. But I can track the Russell by looking at the futures market. And that's the same thing I can do for the S&P, for the Dow and the NASDAQ, and crude oil, of course, is another market that I track rather closely as well, especially now. And I also look at gold, and I also look at bonds. And bonds have really been in the spotlight lately because of the 10-year Treasury yield and rising interest rates and the effect on the economy. And remarkably, the market really hasn't responded, I guess I would say negatively, to the fact that interest rates are going higher. So that's a good sign. That means that the bulls are still, okay. And after we broke out of that descending triangle, looks like we might be able to hang on to these gains. But tomorrow is going to be pivotal. It's going to be a very interesting day tomorrow. Monthly options expiration, and with the economic data that's on the table, as well as the Russell 2000 making new highs. There's just so many pretty wild metrics that are at play, and we'll just see how it all plays out. So with that, I would like to ask you to please trade safe. Trade what you see if you choose to trade at all. And good night and good trading. And I hope this version of the trade report, being a strategy session, has helped you and given you an idea that you might be able to put to work in your own portfolio. And take care. Good night.